Are you worried about paying higher EMIs post the RBI's rate hike last week? Well, a high credit score can actually help you. Well, the Reserve Bank of India last week raised the repo rate by 50 basis points to 5.4% now, making it the third straight increase that actually took the key lending rate above the pre-pandemic levels as well. Now, most of the commercial banks, in turn, have already begun raising the lending rates for you and me. HDFC Bank, for example, has now hiked the MCLR on loans across tenures by up to 10 basis points. ICICI Bank also has hiked the home loan lending rate by 50 basis points. Canara Bank too announced a hike of a lending rate by 50 basis points as well. And a whole host of other public sector banks too have announced rate hikes on to the similar tune. And all of this means that your EMIs are set to get more expensive. People who actually borrowed at rock bottom rates of, say, 6.5% to 7.5% in the last 2 years will now see their loan tenures increase substantially as the rates rise as well. For example, if you had taken a 30 lakh rupee loan at 6.5% for 20 years now, and will have an EMI of, say, you must be paying somewhere around 22,367 rupees per month. But at the same EMI at 8% rate now, the tenure will actually increase to 28 years and 6 months on top of that. And this is as per Bank Bazaar statements as well. Also, there is a high credit score that here can really help you. In this situation, a person with a high credit score above, say, 750 can actually get some respite, as home or other loans are actually offered at a cheaper rate to those people who have a high credit score. Say, for example, if you're a prime borrower, the credit score, say, for example, if you have a credit score of over 750, also you have a stable income, you also repay all your loan payments on time, then you can actually get a home loan offer at a premium of about 250 to 275 basis points over the repo rate. Now, what is this premium? A premium refers to the rate that a lender really charges customers over the repo rate. Now, this premium could actually vary from lender to lender. So the range could also be lower or higher depending on your own financial profile and the lender as well. Now, to put it simply, higher the credit score is, the lower the loan interest rate will be for you. So credit scores here really impact your home loan rates too. Say, for example, if your credit score is above 800, you may actually be available or eligible for the lowest rate subject to the satisfaction of the eligibility criteria. Similarly, lower the score you have on your credit, the higher your rate of interest will be. So experts say there could be, in fact, a 50 basis points of a difference in the rates that are paid by somebody whose credit score is, say, for example, at 800 versus somebody whose credit score is at 700. As the first person who has a credit score of 800 plus may be paying a rate of 7.5%. But the other person who has a 700 credit score may also be somewhere around 8.5% even before this RBI rate hike. So for those people, the rate of interest will actually shoot up to perhaps even 9% and more, depending on the banks as well. So that's the kind of difference you have to pay depending on your financial profile and your credit score. So make sure that your credit score is high, so that in a rising interest rate scenario or otherwise as well, you will always be preferred by your lender, by your bank, to who will actually, you can negotiate this rate when you have a high credit score with your lenders, and they will be giving you the lowest possible rate because of your financial profile. And that is why it is extremely important to maintain a high credit score with your banks in a rising interest rate scenario.
If you like the video, do like, comment, share and subscribe.